Tyler and Aria walk into the same car dealership on the same Saturday to find out what a good credit score is really worth. Same car, same price, same bank, same question. What is a good credit score to buy a car? Tyler drives home, paying about $193 more every single month than Aria. He did not get a better engine. He did not get a better warranty. He just had a different number on a screen. He will pay that difference for the next 5 years. That is roughly $11,500 out of his pocket for the exact same car. The only difference between them is a 3-digit number most people never think about until they are already sitting across from a lender. This is what a good credit score actually is, what it costs you when yours is low, and the exact moves that raise it fast, including what moves your score the most and what most people are getting wrong right now. What is considered a good credit score, and how to raise credit score fast once you know where you stand. Your credit score is a number between 300 and 850. Lenders use it to decide 2 things: whether to approve you and what interest rate to charge you. The higher your number, the less risk they see, and the less they charge you to borrow money. FICO, which about 90% of top lenders use, breaks the ranges down like this. Below 580 is poor. 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good. 800 and above is exceptional. The average American's credit score right now is around 715, sitting in the good range. That sounds fine, but the difference between good and very good, between a 715 and a 760, can cost you far more money than most people realize. What that looks like with real loans. On a $300,000 30-year mortgage, Aria's 760 score might get her around a 6.5% APR based on current 2026 rates. Tyler's 620 score might land him closer to 7.5%. That gap is roughly $200 more per month for Tyler. Over 30 years, he pays on the order of $70,000 to $75,000 more for the same house. On that $35,000 car loan, Aria might pay something like 6% APR. Tyler might be offered something closer to 17%. That is about $190 more every month, roughly $11,500 more over 5 years for the same car. Now think about both together. A car and a house. Tyler pays somewhere around $85,000 more than Aria over the life of those 2 loans. Not because he borrowed more, not because he chose a more expensive option, but because his 3-digit number was lower. That money is a vacation fund, an investment portfolio, a child's college fund. It just went to the bank instead. What is a good credit score to buy a house? Many lenders want to see at least 620 as the minimum, but below roughly 760, you are leaving money on the table. For the best mortgage rates in 2026, aim for 760 or above. Same answer for a car loan. The closer to 760 and above, the more you save. What is a good credit score for a 20-year-old? Any score above 670 at 20 is genuinely ahead of where most people your age start. The average score for people under 25 is around the high 600s. If you are in your 20s and your score is already above 700, you are in a strong position. The goal at every age is to keep moving it towards 760 and above. Your score is built from 5 factors. Understanding the weight of each one changes how you think about every financial decision. Payment history is 35% of your score, the single most important factor. One missed payment, even one, can drop your score 60 to 110 points. It stays on your report for 7 years. Paying on time, every time, is non-negotiable. Credit utilization is 30%. This is how much of your available credit you are using. If you have a $10,000 limit and carry a $4,000 balance, your utilization is 40%. Above about 30%, your score starts dropping. Below about 10%, your score starts climbing. The average American's credit utilization is in the mid-30% range, above the recommended threshold. Most people do not realize their utilization is working against them, even when they pay on time every month. Length of credit history is 15%. The longer your accounts have been open, the better. This is why closing old credit cards, even ones you do not use, can hurt your score. Your oldest account, the average age of all your accounts, and the age of your newest account all factor in. Credit mix is 10%. Lenders like to see that you can handle different types of credit cards, auto loans, student loans, mortgage. You do not need every type, but a mix helps. New credit inquiries are 10%. Every time you apply for new credit, a hard inquiry hits your report and can drop your score 5 to 10 points. It stays on your report for 2 years. Applying for multiple cards in a short window looks like financial desperation to the algorithm, and your score reflects that. What actually moves your score fast? Paying down your credit utilization below 30% is the fastest lever most people have available. If your utilization is above 30% right now, this is the single highest impact action you can take. Dropping from, say, 40% to under 30 can move your score 20 to 50 points within one billing cycle. Below 10%, your score continues to climb. Disputing errors on your credit report is the most underused strategy. Regulators and consumer groups report that errors on credit reports are common, and a single corrected error can raise your score 20 to 50 points. Pull your free report at annualcreditreport.com and look for anything that does not match your actual history. Incorrect late payments, accounts that are not yours, balances that are wrong. Dispute everything that is inaccurate. Credit bureaus generally have 30 days to investigate and remove unverifiable items. Requesting a credit limit increase on an existing card lowers your utilization without you paying a single dollar. If your limit goes from $5,000 to $8,000 and your balance stays the same, your utilization drops immediately. Call your bank or request it online. Many cards allow this once every 6 to 12 months. Becoming an authorized user on someone else's old high-limit card adds their account history to your report. If a parent or close family member has a card that is 10 years old with a low balance and a clean payment history, being added as an authorized user can add 10 to 30 points to your score without you spending $1 on that card. The thing that kills scores faster than anything else: one missed payment. Set every account to auto pay for at least the minimum. Today, not tomorrow. The minimum payment is not the goal, but it protects your payment history while you figure out the rest. What is a good credit score to rent an apartment? Most landlords want to see 620 or above. Competitive markets with multiple applicants often look for 680 or higher. Some luxury properties in major cities want 720 or more. If your score is below 620, you will likely need a cosigner or a larger deposit to get approved for many standard apartments. What is a good credit score for my age specifically? The breakdown by age roughly looks like this. Under 25, the national average is around the high 600s, so anything above 700 is strong for that age group. Ages 25 to 40, averages sit around the high 600s to low 700s. Above about 730 is solid. Ages 40 to 57, averages are in the low 700s. Above roughly 750 is strong. Over 58, averages are in the mid 700s, but age benchmarks are less important than trajectory. A 24-year-old moving from 650 to 700 is doing more for their financial future than a 45-year-old coasting at 730 and not improving. The two mistakes Aria made before she understood credit, and what Tyler is still making. Aria closed her oldest credit card when she paid it off. She thought carrying an old card was pointless. Closing it dropped her average account age and cut her available credit, spiking her utilization. Her score dropped about 40 points overnight from one decision she thought was responsible. Tyler applied for 3 new credit cards in a 4-month window because he wanted the sign-up bonuses. 3 hard inquiries, 3 new accounts lowering his average account age. His score dropped about 35 points and stayed lower for over a year. Both mistakes are common. Both are avoidable once you understand what actually drives the number. A score above roughly 670 gets you approved for most things. A score around 760 and above gets you the best rates. The gap between those two numbers, on a house and a car alone, can easily push past $80,000 over the life of the loans. The fastest moves: pay down utilization below 30%, dispute any errors on your report, do not close old cards, do not apply for multiple accounts at once, and set everything to auto-pay so you never miss a payment. Aria understood this at 25. Tyler's learning it now at 32. The earlier you run these moves, the more money stays in your pocket instead of your lender's. Drop a comment. What is your credit score range right now? And what is your biggest question about moving it up? None of this is financial advice. Credit score factors and lender requirements vary. Check your own reports at annualcreditreport.com and talk to a financial professional for advice specific to your situation. Subscribe for more videos on how money actually works and how to make it work for you. See you next time.